The divergent paths of the Indian and Chinese equity markets have become one of the most polarizing topics in global finance. From a long-term perspective, India's Sensex 30 has witnessed a breathtaking bull run, surging from around 20,000 points in 2008 to over 80,000 points in 2024, a massive 300% gain. Meanwhile, the Shanghai Composite Index, a shares, which stood above 5,000 in early 2008, remains trapped in an endless loop around the 3,000 to 3,300 range. This lost decade for the Chinese index isn't just about GDP growth. It is a structural crisis rooted in the very DNA of the companies that dominate the index. The core of the problem lies in the fact that manufacturing and heavy industry dominate China's stock indices, with a weighting often exceeding 50% in the CSI 300. While China is the world's factory, these manufacturing giants are often a nightmare for shareholders. They operate in a landscape of hyper-competition, rapid technological obsolescence, and a capital-intensive, heavy asset model. To survive, these companies must reinvest nearly every cent of profit back into R&D and new machinery. This relentless capex trap leaves zero room for free cash flow, meaning these industrial titans create massive GDP for the country but return almost nothing to investors in the form of dividends or buybacks. In stark contrast, while the broader Chinese index remains stagnant, a hidden market of consumer giants has delivered returns that rival the world's best performers. Unlike the manufacturing sector, these brands possess high moats and light asset models that prioritize shareholder value. The numbers are staggering. Queiqiao Moutai has delivered a split-adjusted return of over 400 times since its IPO in 2001, becoming a legendary cash cow. Similarly, sportswear giant Anta Sports has seen its stock price soar by more than 30 times since listing in 2007. These success stories prove that in China, the real wealth isn't in the factories, it's in the brands. The 3,000-point index reflects the struggle of an industrial era, while the savvy investors are reaping rewards from the unstoppable rise of the Chinese consumer.